Welcome back. You're watching India Market Open. We're taking stock of the futures and options space. It was an interesting day of trade yesterday. We saw the Nifty once again move back above and close above the mark of 22,500, which is always a positive. It's been a little bit of a consolidation line for the Nifty, and the question really is that does that mean further impetus towards the upside? A lot of times the Nifty has tried to stay above 22,500 and even test 22,800 a handful of times, and it has not been able to do that. But the question really is that is this that moment when we in fact take out that new life high? Now, as far as yesterday's day of trade is concerned, we really didn't see as much traction when it comes to the future space. As you can see, no change in OI. The Bank Nifty, again, that was a relative laggard. In fact, the underlying came off by around 0.3%, and again, a very little change in open interest. But we are talking about the options market out here, and considering the Nifty moved higher, we did see a lot of writing around the 22,500 and 22,400 puts. Those are the strikes which were significantly active. But what about when it comes to your overall open interest distribution picture for, well, this week's expiry, that is tomorrow? That's as far as the Nifty is concerned. On the higher end, of course, we continue to see a lot of action building up around 23,000. It is unlikely that we will reach 23,000 between today and tomorrow, which means that we are also looking at a significant amount of writing around the 23,000 call. That said, a lot of things could change because we're about 2.5% away from that mark. So you never know, and you can't really rule out a lot because we are certainly in very volatile times, and the India Volatility Index sustains above the mark of 20 at the moment. Of course, on the lower end, we continue to keep an eye on 22,500 and 22,400. That's where we're seeing a little bit more accumulation around puts. Now, let's move on and talk about a handful of other counters and a rather handful of other, strikes and option markets. And of course, this is the Bank Nifty. Now, Bank Nifty, as I was mentioning, has been a little bit of a laggard, which means that it is seeing a significant amount more in terms of call writing as compared to puts being written at the moment. That could, of course, change over the course of the day. But for now, we're keeping an eye on 48,000 and 48,500. These are the two marks where we have a significant amount of call writing. And these are also round numbers, so psychologically, it does come to that when it comes to placing bets for a lot of traders. But we are also considering the 6th of June expiry. Not much has changed there. We continue to see 23,000 call as the one with the max OI at the moment, significantly higher as compared to something like a 22,500, where both calls and puts have been equally written. I reckon to a certain extent that would be strangles written. But again, we're still a few days away from that particular expiry. So with that said, let's go on and talk about stocks which are also in focus. A lot of them moving on the back of earnings. Metropolis, Coal India, Sun Pharma, BHEL, all of them advancing in trade. Astral, of course, did come off by around 5%, but the commentary in the conference call post-market hours was very strong. So I wonder if there could, in fact, be some short covering there. In terms of stocks which are seeing unwinding, again, looking at short covering for BEL, Balakrishna Industries and Dalmia Bharat, very little traction when it comes to Indian Hotels and Escorts. But that said, let's get an expert opinion here and see what they are making of these markets and what kind of options they're deploying here. We have Ajit Rambiar or Ajira Ventures who's joining us on the show. Ajit, good morning. Thank you so much for joining in. Ajit, I believe you do have an option structure that you are deploying on the Nifty. What's the way forward? What is your reading and how are you going about it?
Good morning, Agam. Thanks for having me on the show. Over the past week, the markets have been fairly volatile. The volatility is primarily due to political uncertainty and FII selling. FIIs have been continuously selling, except on Friday, it bought some. So as we approach 4th June, I believe the markets are gearing up for a significant movement post-election results. Even historically, election results have had a significant outcome on market sentiment. So we should expect a clear trend to emerge once the results are declared. Speaking about the indices, we find Nifty to be more stronger than Bank Nifty. Nifty is having a resistance at around 20,650 levels and support at around 22,350 levels. And in Bank Nifty, there is a clear resistance at 48,200 levels and a good support at 47,500 levels. Bank Nifty is not able to sustain about 48,200 levels these days, and any close above 48,200 will give a good rally.
All right. And what kind of option structure are you playing out here, Ajit?
Yeah, like we have a play in Nifty where we have a special election special trade for here. So we initiate a calendar spread where we sell one Nifty 6th June 22,500 put at 390 and simultaneously buy one Nifty 13th June 22,500 put at 428. So this is a calendar spread where we buy the far off option, put option, and sell the nearer option, 6th June. See, both these expiries are after the 4th of June. So this is a pure Vega play, and we will find highest Vega or VIX on 4th, which is the election result day. So we square off this strategy at the peak level when the VIX is at its peak. There's on 4th. So this is it.
In very simplified terms, what Ajit is looking to do is take advantage of the big difference between implied volatilities of the 6th of June expiry and the subsequent expiry. The difference, of course, is that because 6th of June will have that big event, which is why implied volatilities will be high, which is actually nothing but a function of expanded option premiums. And that is what the differential between these two expiries is what Ajit is looking to take advantage of. And of course, as he's mentioned, the strikes that in fact you can go ahead and place this specific calendar spread going in. But Ajit, moving on, I believe you also have an option structure on REC. Can you take us through that as well?
Yeah, so we are bullish on this counter. We initiate a simple bullish butterfly strategy whereby we buy one May call of 550 at 11.40 and sell two 560 calls at 8 rupees and hedge it with buying one 570 call at 550. So the maximum risk and investment for this strategy is mere 90 paise. So you are keeping only 90 paise per trade on the table to gain rupees 10 if it closes at 560 levels.
So that's again a bullish butterfly spread when it comes to REC. Now remember that when it comes to REC, it's been one of those counters which has been on the mend, and actually it's recovered a little bit. And I reckon that Ajit is looking to play that specific strategy going forward. But on that note, Ajit, taking a moment to thank you for joining us and taking us through your views on the markets, giving us that big election trade, as well as your view on REC. With that, it's back to you all.